Hello dear traders, let's discuss the market situation for the euro and the pound today on January 12, 2024. As we can see on the chart, the euro spent the first half of the day in the narrow sideways channel. A similar situation was observed in the British pound, which quickly recovered after some downward pressure. The market was waiting for the inflation data in the US, which showed that consumer prices surpassed analysts' expectations, increasing by 0.3% in December compared to 0.1% growth in November. On an annual basis, inflation also went up to 3.4% from the previous value of 3.1%, while forecasts suggested a rise to only 3.2%. Against this backdrop, the US dollar strengthened both against the euro and the pound. Market participants also focused on core inflation that excludes food and energy prices. This indicator declined to 3.9% from the previous reading of 4%, while economists expected a deeper decline to 3.8%. Apparently, the fresh data signals that the Fed may need to stop giving hints about possible rate cuts. It's very likely that the first reduction rates can be shifted from the March meeting to the meeting in May. If US inflation rates remain stable, supported by a robust labor market, the American regulator will postpone the planned monetary easing. If so, the US dollar will gain additional support across the board. Although yesterday the euro-dollar pair was actively declining, it's still in the sideways channel, and the upside correction against the downtrend from the last years still continues. Therefore, the euro and the pound are still at risk of depreciating further against the greenback. Currently, there are no factors to prop up the euro except for the intention of ECB officials to keep rates at high levels. What's more, the European economy is not in its best condition, which is why the euro is weakening and trading flat. Let's have a look at today's economic calendar. The UK is set to release its GDP data for November, which is expected to rise by 0.2%. Compared to the previous year, the indicator is forecast to decline by 0.1%. If the actual data disappoints the market, this will return pressure on the pound, and the risk of recession in the UK remains high. Traders will also take notice of the changes in manufacturing production in the UK. Its decline will also weigh on the pound. In Europe, France will publish the data on services, PMI, and other reports that may define the direction of the pound sterling today. Among other important publications today are the CPI data in France and Spain, the French Consumer Spending Report, and the statement by ECB's representative Philip Lane. The key report for today will be the Producer Price Index for December in the US. This indicator is projected to increase by 0.1% on a monthly basis and by 1.3% year on year. Also in the US, FOMC member Neil Kashkari will comment on the recent inflation data. If he voices a moderately hawkish stance and confirms the need to keep rates higher for longer, the US dollar will definitely gain ground. And now let's proceed to the technical analysis. The euro-dollar pair is trading within the sideways channel. A false breakout at 1.0956 will create an entry point into long positions. If bears protect the level of 1.0996, this will signal an entry point into short positions. In case the euro bulls retreat to the middle of the sideways channel, its breakout and the retest will lead to a decline towards the level of 1.0912 or even 1.0879. At this point, I will consider buying after a rebound, keeping in mind the correction of 30-35 pips. Long positions can be opened at 1.0912 and 1.0956 only after a false breakout. If bears lose control over 1.0996, bulls will push the price back to 1.1035 or even 1.1076, where selling may be possible after a bounce with a correction of 30-35 pips. As for the British pound, positive data on UK GDP can lead to a false breakout at 1.2753, which will serve as a good entry point into long positions. Bulls are likely to target their next level at 1.2789. Its breakout and the retest will generate a buy signal with a target at 1.2823 and 1.2853. At this point, I will consider selling the pair after a rebound with a possible correction of 25-30 pips. Short positions can be opened at 1.2823 or 1.2789 only after a false breakout. If the GDP data turns out to be disappointing, a failed consolidation above 1.2789 or a retest of 1.2753 will act as a sell signal. If so, the pair is likely to move towards 1.2722 and 1.2690. This is where I will consider going long after a bounce and a correction of 30-35 pips. Short positions can be opened at 1.2722 and 1.2753 only after a false breakout. Best of luck!